A very warm welcome to another VCW 100 interview from VC World, which is the venture capital community of BW Businessworld. We have with us today Pushkar Mukherjee, the CEO and co-founder of Trip Capital, along with Anup Gopinath, Head of Technology, leading the innovations at Trip Capital. Drip Capital, a leading cross-border digital trade finance platform, has been recently named in Y Combinator's top companies list. Till date, the company has raised nearly 520 million through venture capital and debt, including over 85 million in equity capital through investors like Axel Partners, Sequoia, Y Combinators, amongst others. Thank you so much for joining us today, Pushkar and Anil.
Glad to be here.
So I'll be starting with the first question, and I'll ask Pushkar to take the first question. Sure. How does Drip leverage technology to help SMBs access credit, and how is it different from traditional lending?
Sure. So I guess when we look at traditional lenders, right, like typically banks and NBFCs, most of them operate a highly sort of manual process of assessing SMBs, servicing them, and so on and so forth, right? So when you think about the cost of actually servicing or acquiring a large client for the banks is exactly the same as acquiring and servicing a small business. So as a result, traditionally, and what we've seen historically is that banks and NBFCs have typically focused on the large segment of the market, which we define as the corporate segment of the market. And this segment, which is the SMB segment, has largely remained underserved. So because we are a digital first platform, we are leveraging technology in every aspect of our business, every aspect of our product. Our focus is really on this underserved segment of the market, which is the SMB segment. So that's, I would say, the first difference. The second is that, as I mentioned, because the focus has been on the large corporates for most of the banks, NBFCs have helped bridge some of the gap in the SMB segment. However, in the absence of technology, in the absence of being able to leverage data, the approach which has been followed by these NBFCs is predominantly to do collateral-backed financing in this segment. And by that, what I mean is that they would typically take land, property, machinery, some hard asset as a security, and against that they would be basically extending some sort of a loan to the SMB. But many of these SMBs we work with, we realize that that's actually a big problem for many of the SMBs. They don't have adequate collateral, and as a result are unable to qualify for any kind of financing from traditional lending institutions. And our platform, because we again leverage a number of third-party electronic data sources to assess the worthiness of every SMB and every transaction, we are able to service these SMBs much better with appropriate amount of credit. And I would say the last thing where we differ significantly is really around the processes and the turnaround times, right? Like imagine an SMB going to a traditional company to avail credit. The paperwork involved, the manual processes involved, the highly bureaucratic process involved, it could take them anywhere from 30 to 45 days to get any kind of approval, right? Whereas at Drip, our aim is to really reduce the amount of information we take from the SMB, do it in a digital first manner, do it in a manner that, we make the process really seamless for the SMB and are able to approve them as fast as we can. And our turnaround times hence are significantly lower than typical like traditional lending institutions. So I would say these would be the three key areas where we differ from most of the traditional institutions. Yeah.
My next question is on the expansion strategies that was followed by Drip during the pandemic. And as we know, so many technology companies have thrived and scaled to a very large extent during the pandemic. So if you could give us a sense of how the proprietary risk assessment model helped the company to scale to new geographies amidst the pandemic.
Sure. So perhaps taking a step back, right? When we launched Drip, the focus or the segment we focused on was the SMB segment because we believed that that segment of the market was highly underserved. And more specifically, given our familiarity with India, we launched with a focus on Indian SMB exporters. We specifically were looking at offering a trade finance solution, which is to do with helping these SMBs export more or get export credit. And our learnings were that, and even our kind of understanding was that SMB problems are not very different across geographies, right? So when you think about an SMB exporter in India selling to US, the kinds of problems they face when it comes to access to credit is very similar to, let's say, a Mexican exporter selling to UK, right? The second thing was that we also learned that cross-border trade is very standardized across geographies. So whether, again, from whichever country to whichever country the transaction is happening, it follows a very similar process. So every shipment which goes out, there's typically customs involved, shipping lines involved, who issue certain documents as proofs of shipment, foreign customs involved, tax authorities involved, inspection agencies involved. And because the processes are, again, very standardized across geographies, as we set out to build a business, we were focused on leveraging these third-party data sources to be able to assess risk, right? And this, I guess, over time in India and in markets outside India, we've been able to really tap into a number of these data sources which are standardized across geographies. And our risk model, which we started off building for Indian SMB exporters or transactions pertaining to Indian SMB exporters, we believed that we could take it to other markets as well, and we've been able to do that successfully. So as the model got proven out, as the product matured between 2016 and 2019, in 2019 we ventured into our first international market, which was Mexico. In 2020 we also launched a US buyer focused business, right? And I think what we've been able to see is that I think what we've been able to kind of do is really leverage the backend infrastructure, the product, the tech, the risk model which we've been able to build for India, and take it to other geographies. And even despite the pandemic, or I guess during the pandemic, when there was a big thrust towards technology first players where customers were more comfortable adopting digital solutions, we saw that our model and the fact that we were a digital first company really helped us, and that's what the journey has been so far. And I think longer term, as we think about it, global trade is massive, and our focus is really to kind of address issues for SMB exporters and importers across the world. So we would look at not just these three markets, but also look at markets beyond as we think about scaling up the company and over the next several years.
Thank you so much, Pushkar. Thank you. My next question would be to Anil, and if you could tell us a little bit about how technology could disrupt the paper-based cross-border businesses, and how is it currently impacting the global supply chain disruption? Over to you, Anil.
Yeah, thank you. Global supply chains currently are under a continuous pressure due to the changing political, social, economic changes that are happening around the world. And this is something that we have to expect going forward. These kind of disruptions, some of them are things that we can predict. Most of them are not. Right? So this is something that we need to accept going forward. So the way to do this is, when these disruptions occur, we should be able to adapt quickly. The supply chains would need to adapt and create alternate routes, and then be able to stabilize themselves automatically. Now, how do we do that? This is by understanding the correlationship between importers and exporters worldwide. What are they selling? Who is buying? Who is selling? Where are they headed towards? Who is the end customer? How are importers and exporters tied to these supply chains? So when there is disruptions in these connections, we can then build alternate routes. We can then look at a different set of exporters and importers that can meet the growing demand. And also maybe we could even suggest, having suggest to exporters that, hey, this is something that you could be exporting to this importer because there's a demand in this area. We've seen this, many times, especially recently with the different changes that are happening across different countries in the recent past, and buying and selling and importing and exporting from different countries, and the graphs and connections have changed in the recent past. So the ability to model them, and this modeling, all of this again goes back to having data on all these interactions. So once you have the data, then you can look at these predictive and correlative models that can help understand, and also then help us better adapt to these changes. That's the first aspect, where we understand the system and then build alternate routes and be ready and have simulations that tell us, if this goes wrong, here is an alternate route. That's the first part. The second part that we are focused on significantly is linking small and medium businesses into the supply chain. So right now, the large supply chains, the small and medium businesses don't have access to those large supply chains. So as a result, SMBs don't have an opportunity to participate in there, and when there are disruptions, there's no opportunity for these small and medium businesses to kind of step in and harmonize things. So that is where the technology that we are building is helping these small businesses contribute to the global supply chains and kind of stabilize this. Sometimes, there are local SMBs who can fill in a gap if there is a disruption from exports. So there are different ways in which SMBs can then help stabilize the supply chain and thereby reduce the cost. Right? When there is instability, that's when you find that retail prices go up. So having the tech that we build allows our small businesses to connect to these to the supply chains, and this we feel is another key ingredient to kind of stabilize the global supply chains. Now, all of the supply chain and the interrelationships are paper-based, so that is another aspect where we are converting things into digital format, and then and thereby helping to plug the interactions of SMBs into these global chains. So those are the kind of technologies that we are building that are helping in two ways. One is to predict the changes that are happening, and then build a technology that can stabilize things, and also provide SMBs the option of having SMBs also contribute to stabilizing the global supply chains.
Can you give us a sense of the current technology trends in the cross-border space, especially perhaps pertaining to the MSME sector?
Right. So I just talked about how do we connect and balance the global supply chain imbalances that are going on. So to that extent, we see three trends in technology to facilitate this and also make import and export more efficient. And the first one is what I call the digitization, right? Like we talked earlier that much of import export is paper-based, and that's how it started. And most countries still use a paper-based customs process and shipping process and all of that. So once you have a paper-based approach, it's very difficult to kind of get data from shipments, and also assess and make changes quickly. So the first aspect is digitization. So digitization of all data related to import and export. So if you, and this means that you have variety of documents like bill of lading, shipping docs, invoice docs, several documents that are related to import and export, which all need to be digitized. So one mechanism is, one technology that we believe will have a huge impact is intelligent document parsing. And this is a mechanism by which you take bill of lading and invoice docs, which are in different languages and different formats, and then still be able to extract relevant information from it. The shipper's name, bill of lading, date of shipment, the cost, and all of this critical information that can be extracted from paper. So this is the first step, and this paves the way for providing digital data to the rest of the ecosystem. There is another technology that we think is very promising, and that's blockchain. Blockchain allows importers and exporters to come together and create an agreement among themselves. And also it helps to digitally sign these agreements. So blockchain helps provide a trusted environment. People cannot tamper with these agreements. And also all the signals are digitized. So you can look at a blockchain and then be able to extract all the digital data very quickly. So this is the first set of technology trends that we think will help towards digitization. One set of trends which are very important in the shaping of things to come. The second set of things is building the interoperability between all the players. Like global import-export is done by it includes a number of players: importers, exporters, insurance. There's shipping folks, and so there's a variety of players who make this happen. So ability for all of these players to import, to facilitate this import and export is very critical. And we see each of these players now providing APIs that provide access to their own digital data. So this could be like a shipping company providing real-time access to the containers, right? So that's a useful set of information that can be used by importers and exporters, and also as a useful information that can be plugged into some of the other systems that can be consuming this. So this interoperability helps to also react to some changes. Say, for example, there is a shipping delay or a port congestion. Then you can look at the impact of that on supply chain and then make changes, right? So the ability for all these players to interact with each other is very important. And we see a bunch of technologies that are facilitating this. Each of these players are now building APIs and using like REST technologies to kind of to provide this information, exchange this information. And the third bit is, once you have the digital data and you have the interoperability between these systems in place, the third set of technology that we see is the recommendation systems. And these are systems which are intelligent, which uses machine learning, looks at the data and recommends what is best for you. So if you're a small or medium business, these systems help you to connect you with new importers. So for importers, you are given recommendations of new exporters. So traditionally, finding new importers and exporters are based on like relationships that have been built over years. But now we see supply chain being disrupted by a lot of world economic changes and all of that. So as a result, recommendation engines and technologies around recommendation engines can actually help importers and exporters to build new relationships and kind of bring that stability and balance to the ever-changing dynamics of import and export. So that's the third set of technologies that we think are playing a significant role, and we'll see a lot of that going in the next couple of years. So these are three trends that we see in the tech sector right now.
Thank you, Anand. Thank you so much. My next question would be, how has Grip Capital's product helped MSME traders in becoming more digitally savvy? I'd ask Pushkar to take up that question, please. Over to you.
Sure. So I would say that, as I mentioned, we started Drip with a vision of being a digital first trade finance platform, because we obviously believed that technology was key to solving the credit problem which SMBs face, right? A lot of our effort has, of course, gone into really building a very robust back-end risk management and operations system. However, I think one thing which we've still ensured while building a very robust back-end risk management system is to have a sort of a customer-facing journey, customer-facing assets which were very user-friendly, right? So we have, for example, a web application through which customers can get onboarded with us. We have a mobile app through which customers interact with us. They submit transactions to us. They can track their accounts. They can track their balances, and so on and so forth. And I think what's actually been extremely encouraging is that we've seen very strong adoption of some of these mobile apps and web apps we have across the country, right? Like 60% of our customers are from tier 3, tier 4 towns, not Bombay, Bangalore, Delhi kind of areas. And we are definitely seeing a change where customers are very comfortable engaging with us digitally. I would say that as we've been in the market working with these SMB exporters, we also realize that their technology can play a strong role in also addressing other kinds of challenges and other kinds of needs these customers have, right? So what we are focused on now is to continue to build tools, continue to build software which can make the life of SMB easier. Things like a container tracking, a sort of embedded container tracking tool, which can help customers track their containers real time, get notifications, because some of them have payment terms tied to containers and so on and so forth. These are just some examples. So I would say that, while our core financing product and our financing offering itself has a number of digital assets for customers to engage with us, I think as we think about the next few years, the idea would be to how do we really make the life of these customers easy who are anyways engaging with us digitally and offer them other kinds of products and services. And that's where we are playing a role. So.
I had one more question for you, Pushkar. It's like in the lines of what we were just discussing, and of course we know that Drip has been recently been listed by Y Combinator, and also the company has raised nearly 520 million. So can you give us a sense of possibly what's coming up for the company in this year, or possibly by the end of 2023?
Yeah. So I would say, we are addressing a problem which is not easy to solve. And we have been investing in building technology to really solve this credit gap problem globally. I would say we are just scratching the surface today. I think we operate in 3 key markets: India, Mexico, US. And that too, with Mexico, US, we've been recent entrants, last 18 months, 24 months, right? So just given the scale of the opportunity ahead of us, our focus would continue to be, not just deepening our presence in these markets, but also obviously working with and working or entering into other markets which are somewhat similar to these markets. So, for example, from Mexico, we believe that LATAM broadly is an interesting market, which is again very similar to Mexico, highly underserved. From closer to India, South Asia is another market which broadly again is an interesting opportunity for us. So we would continue to focus on building on our trade finance offering which we have, and continuing to, while in the short term deepen our presence in these markets, but in the medium to long term take the product to many more markets where the problems are similar. The other thing which we've started investing in is, really building this trade facilitation platform, right? So far, I think the main offering for us has been really around trade finance, where we are only solving the credit problem for the SMB. But because we have so many SMBs we work with globally, we want to expand our product offering from pure play trade finance to actually helping them or facilitate trade from them by, as I mentioned, building tools, providing them data, providing them recommendations, and so on and so forth, which can help them increase their trade, just manage their trade better, right? In terms of funding, to be honest, I think we closed our funding round only about 4-5 months ago. So we are focused on execution. On the equity front, at least, we don't anticipate a fundraise anytime soon. And on the capital side, we have been able to onboard some really big and great partners, including Barclays Bank and East West Bank. And, we would look at continuing to scale up our business with these partners. So I would say, I think the focus for us would definitely be around execution, both on the trade finance side and then expanding the product offerings over the next 18-24 months.
Thank you so much, Pushkar. Thank you.
Thank you.
My next question would be for Anil. Could you give us a sense of how DRIP is leveraging technology, and how is it currently differentiating itself from other traditional lenders? And do you think that in the upcoming years, are you looking at developing any new product? Are you looking at introducing any new kind of innovation to differentiate the model even further?
Yeah, so from a product differentiation perspective, I think as Pushkar mentioned, our key focus is to make this easy for small businesses to start using. So that's been one of the key aspects of the product. We've been adding more and more features to facilitate this. The other aspect that we continue to innovate is to reduce the turnaround time. Right? So we want to provide financing to small businesses. They need the money so fast, so we really want to make sure that we can do all the risk analysis and so basically all the technology that runs under the hood, the complex process of running machine learning models and all of that happens at a very fast pace. So that is one thing that we at engineering are trying to, and the ability to scale this product out and reach as many small businesses worldwide. So that's the other thing where we can actually customize the product really quickly, then go and launch at different countries and really reach out to all of those small and medium businesses. So these are three aspects that we are focusing on the finance side of things. And like Pushkar said, we are also looking at helping small businesses go beyond just finance and provide all the other trade facilitation solutions. So the combination of these two things, I think, is very unique. And so I think these are things that we will continue to innovate. And there's a lot to do. Like Pushkar said, this is just the beginning. We have a lot of things going back and impacting supply chains and helping our customers get to those things are really a lot of things that we are working at. So a combination of these things are making us unique, and you see maybe some of the competitors just focusing on one particular area, but we are taking a really holistic view to help small and medium businesses be successful.
Thank you so much, Anand. I'd ask Pushkar to give us his closing remark for the interview. So a lot of our viewer base and also reader base comes from the entrepreneurial ecosystem of India. So we would ask you to give your message and your inputs on how they should be starting out with their entrepreneurial journey.
Sure. So I would say that we've been operating in India now for close to five to 6 years now, and I think through the course of this time, I think we've really seen an inflection point. I mean, what we are seeing in the whole startup ecosystem, particularly over the last 18-24 months, we are seeing on the consumer side, customers becoming a lot more digital savvy, very comfortable engaging with products. On the SMB side as well, we are starting to see that digital adoption. Of course, we've experienced it, and I'm sure many of the other startups which are operating in the space are also seeing it. So I don't think there's a better time to start up, than now in India. Whether you're solving a consumer problem or a business problem, I think we are actually at an inflection point. I think there's also been a lot of things which have happened in the ecosystem to facilitate digitization, whether it's digitization of a lot of data, whether it's the mobile penetration, whether it's geo. Of course, we talk about it, but I think we have experienced it firsthand. We've seen how our customer base has become a lot more savvier, a lot more digital. And I think this is something which is a real trend, which I guess all budding entrepreneurs should look at capitalizing on. And then I think on a personal note, I've been kind of, started off as a 2-member company, and now we are almost 320, 330 plus, right? And, personally also, it took me maybe 3-4 years before taking the plunge. And I think the only thing I regret was that I wish I could have started earlier. So I think the one thing I would say is that it's never too late. And I think, if you want to do something take the plunge now. I mean, the worst thing that's going to happen is that you'll try out something, maybe it doesn't work, but, I think the market has also evolved quite substantially now that people are actually starting to value a startup, even if it's a unsuccessful attempt at launching a startup. People are still valuing that experience quite a lot, because the ecosystem is a lot more mature. I think the apprehensions people have are nothing to be worried about. We really value talent. Even if when we are recruiting, I think we also believe that people who worked in these small setups, startups, or started up, are great, because they've actually, like, they have this mentality of hustling, and they've really sort of been in a very unstructured environment, which is key to being successful in a startup. So yeah, those would be, I think, my closing remarks.
Thank you so much. Thank you, Pushkar. Thank you, Anand, for joining us today. I'm very sure that the viewers from VC World are going to find this conversation to be much engaging, and definitely the SMB base of India is obviously leveraging and also benefiting from the technology that is being given out by Drip Capital. So I wish good luck to the team. Thank you so much for joining us.
Thank you. Thank you, guys.
Thank you very much. Thank you. Bye.